Bank Negara Malaysia just cut our interest rates by 25 basis points to 2.75%. This is actually the first policy move they've made since 2023. But how does this actually impact us Malaysians? So in today's video, I'm going to be talking about why they did this, how it directly impacts us, and some things that you might want to consider doing because it will impact your personal finances. Let's get to it. So, why do we decide to cut interest rates now? The first major obvious reason that I can think of at least is that we are following global trends. If we look at pretty much every other country out there, aside from probably Japan, they're all cutting their interest rates as well. Even looking at one of our close neighbors, Indonesia, their interest rates after the last cut is at its lowest over the last 2 years. For us, we pretty much haven't been doing anything ever since the COVID era where we cut rates and then hiked it back up. Ever since then, we haven't been doing anything much because our economy was doing pretty well, inflation was under control, and we didn't have any reason to cut interest rates until now. And one of the reasons that Bank Negara probably thought that now is the right time to cut is that, speaking of our economy, it is not looking as hot as it was before. For one, inflation dropped to its lowest level in 4 years. I know that to some people, this might be good news, right? Inflation is lower, meaning the prices of the things that we buy is not so expensive. But in reality, lower inflation usually also signals that an economy is starting to slow down. Then we add into the fact that our GDP growth has also been slowing down. I mean, we are still at a pretty good rate, 4% plus GDP growth year on year, but it is lower than last year, which also means that we are not on track to meet this year's target. And the final nail in the coffin for all of this is that US just confirmed the 25% tariff on Malaysia, which will negatively impact our economy because it means that anything we export there will now become more expensive, which makes our products less competitive. Honestly, my first reaction or my first instinct towards this cut is that it wasn't necessary and I wasn't sure why we decided to cut rates now. But having said all of this, having put all of this into mind, I guess Bank Negara Malaysia just wanted to be a bit more conservative. They wanted to be a bit more proactive. So this is a preemptive move to cut interest rates before our economy gets any worse. So how does this impact us directly as Malaysians, right? Of course, the Malaysian economy is one thing, but us as individuals, that's a completely separate topic. So there will be winners and losers depending on your scenario. Let's get through the list. So the first most obvious winner will be every single Malaysian who currently has a house loan or a mortgage. I assume that most of us here have a floating rate loan. I don't think they are offering many fixed rate loans out there, but a floating rate loan essentially means that when B&M adjusts our OPR up or down, our interest rates for that housing loan will also go up or down. So assuming you have a 500,000 ringgit housing loan, this 0.25% cut by Bank Negara will mean that your monthly payment to your housing loan will go down by approximately 100 ringgit. So that's good news. By the way, just a quick side note, this is basically how cutting interest rates can help boost an economy. So let's say I'm this person with a 500,000 ringgit loan. Now that I pay 100 ringgit less to my loan, it means that I have this extra 100 ringgit that I can spend elsewhere. So this pretty much, grows the economy. Other winners will basically be whoever else is looking for a loan. So let's say you're someone who has been meaning to buy a car for a long time. You don't have a car right now, or your car is really old and always breaks down. Now is a pretty good time for you to lock down these low interest rates. Don't just buy a car because interest rates are low though. Make sure that it's still, within your means. But yeah, if you're looking for a car, now is a pretty good time. And that new Proton X50, it does look pretty good. Finally, this is a bit of an indirect benefit, but some of you guys might see some potential in your careers. So because borrowing rates are now lower, any companies with existing loans will now pay a lower interest payment, which means that they could turn a higher profit in the next few quarters or even years. And there's another example where some of your companies might be deciding to expand because borrowing is now cheaper. So maybe they decide to open new stores or open new manufacturing plants, and this could open up opportunities for promotions or even more hiring. So yeah, you guys never know. Maybe your company does do well because of this and they start to give you a nice annual bonus next year. The most disappointing part for most of us, or at least for me, is that for those of you guys who are saving money or investing your money into money market funds, we can expect the returns from these funds to drop. Just like how borrowing costs are now lower, the interest that we get for basically investing into these fixed income products will also be lower. So all of these products that I'm sure many of you guys use, like Touch 'n Go, Go Plus, Stashaway Simple, Versa Cash, do expect them to start dropping their interest rates over the next few days or weeks. I would expect them to do it sooner rather than later. Also, if any of you guys who are retirees who depend on this kind of dividends or interest payments for your main source of income, then you need to expect that this income source will start to go down as well. And then another loser in this entire scenario is basically all of us, because when we cut interest rates, we should expect the Malaysian ringgit to start to go down. I won't explain or won't talk too much about this, but yeah, basically that's how it works. When you reduce interest rates, your currency weakens. When you increase interest rates, your currency strengthens. But this is not guaranteed, because we cut interest rate by 25 basis points, but like I said, every other country is cutting interest rates as well. So maybe we won't be so impacted, but if you think about it from a textbook point of view, yes, our ringgit will probably depreciate a bit. Now that we've talked about the direct impact on ordinary Malaysians, let me just talk quickly about winners and losers from a company perspective or from a sector perspective. It's actually pretty straightforward. Companies who have a lot of loans, who require or rely on loans to run their business basically, they will do well because now the cost of borrowing is lower. So think about guys like property developers, right? They have a lot of debt to sort of build these new developments, so they will be a big winner from this shift. In terms of losers, it's pretty much the opposite, right? These developers, they are borrowing money with a lower rate, and who are they borrowing money from? It's from the banks. So the banks will be the losers because interest rates are now lower, which means that interest income will also be lower. Maybe this could be offset by more people taking on more loans, but I don't think that's going to be the case. So yeah, in terms of losers, actually, it's pretty much just the banks. We can see it from the performance of the different sectors in the FBM KLCI on the day that this interest rate cut was announced. Pretty much every single sector was in the green except the finance sector. So yeah, it's pretty clear who's going to win and who's going to lose. So what should you do about all of this? There's not much that we can do, of course, because these things are influenced by Bank Negara, but there are some small personal finance tweaks that you can make whenever our OPR changes. For one, those of you guys who have housing loans, you should keep an eye out on it. So typically, like I said, your interest rate should go down, which means your monthly payments should go down as well. Just make sure that your banks are adjusting it accordingly. Some of you guys might be paying less moving forward. Some of you guys might pay the exact same amount, but instead of paying more to interest, you're now paying more to principal. If you're someone who has really high interest rate loans, so let's say, for example, you have a very high interest rate personal loan, you can start looking at other offers out there in the market. Maybe they have lower rates, and maybe it could be worth considering, to refinance your entire loan at a lower rate so that you can pay lower interest. Now, I wouldn't recommend you guys go out and, splurge and buy things that are necessary just because interest rates are lower. But like I said, if you've been considering to buy a car for a long time now, right? You need this car, it is within your means, then now it's pretty much a good time for you to lock in these lower rates, because it means that you'll be paying a lower interest throughout the entire loan period. For those of you guys buying houses, I would say just be careful right now because interest rates can always go back up. I know a lot of people who bought properties in the COVID era where interest rates were, I think, 1% plus, 1.75% maybe. They basically spent or bought the house based on the interest rate back then, and then when interest rates went back up to 3%, they basically can't afford their mortgage anymore. So yeah, just be a bit careful. Just factor in your monthly payments, assuming the interest rates were 3%, because that has been the baseline for many, many years. In terms of savings and investments, there are a few tweaks you can make as well. Like I said earlier, your money market fund returns, you should expect them to go down over the next few days. So that kind of sucks. I guess this is one benefit of having fixed deposits, because if you took a fixed deposit, let's say last week or last month, then you've locked in the rates for the next however long your fixed deposit is for. But if you guys do see any other promos for FDs out there, which is still using the previous high interest rate, then it might be worth considering you locking in that rate. Versa is also running this promo where they're doing a 4.2% guaranteed per annum. So I would definitely be locking my money up there and taking up that quest and just securing this return for the next 6 months at least. Another thing that you should definitely consider is to maybe invest more money into stocks compared to fixed income products like money market funds. So back then, when money market funds were giving us 3%, then maybe the incentive to invest into stocks is not that high, because 3%, safe returns is already pretty good. But now at 2.75%, maybe it's worth shifting a bit from money market funds to more risky assets, because now our guaranteed return is lower than it was before. I know it's not a huge change, right? Going from 3% to 2.75%, but you just need to keep an eye on it, because this could mean that more rate cuts can come. If BNM cuts it down to 2%, then definitely money market funds won't be as enticing anymore. 2% returns is nothing great. It might not even beat inflation, and that's why when interest rates go down, we want to invest more of our money into risky assets. By the way, just so you guys know, funds like EPF, funds like Amanah Saham, all of these guys also get a pretty good chunk of their returns from fixed income products like money market funds, like fixed deposits. So they will definitely be impacted in terms of dividends when it comes to this. I don't know how it'll impact their overall performance. Maybe their capital gain side is really good, but we'll have to wait and see next year. Then for those of you guys who are a bit more active with your stock portfolio, who like to buy and sell more actively, who like to look at trends, sectors and stuff like that, yeah, pretty much what I said earlier about who's going to win and who's going to lose in the stock market, you can position yourself accordingly. Personally, I do have most of my Malaysian stock investments into banks, so they will definitely suffer a bit. But instead of making any rash decision right now, I'm just going to be taking my time to think about what I'm going to be doing next. For now, I'll just be holding on to my stock portfolio and just leave it there as it was. So those are the impacts of interest rate cuts to ordinary Malaysians. And this is one of those things where it kind of flies under the radar, but it can quietly really impact our personal finances. So let me know down in the comments below, how do you guys feel about this interest rate cut? And do you guys think there will be more to come? Thanks for watching this video to the end, guys. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.